Welcome back, YouTube. In this video, we're going to address a number of topics, primarily a few of the things that I've seen circulating, like the top is in for crypto. Dogecoin is going to 5 cent or 8 cent, 8 cents, and we are probably not going to have a high peak bull run, not just for Doge, but for crypto in general, right? So we're going to talk about all these topics here. We're going to get some factual information. I waited a few days just because I wanted to see where we were more than likely going to get some resistance here, because sometimes you have to let the charts play out if you're looking for like some evidence, because if things are just moving around, if there's extreme liquidity coming out of the market or even extreme bullishness, you don't know how strong that's going to be in either direction. That's one of the reasons I say I can't chart FOMO. If people are asking what do I think like X payments is going to mean for Doge, I can't chart that. Just like if people are pulling liquidity out of the market, where do I think the bottom is going to be? I have to wait and see where we're getting the buy orders are starting to be strong enough to put a resistance up. And because I can't chart that as well, I can give projections, but I can't necessarily chart it with certainty until we start to see some evidence here, because I like to at least be able to point to something on the charts and say, this is why I feel the way I feel. This is why I say what I'm saying, because I see this in the chart. So now that we can get some evidence here and we're starting to see something, we're getting close to some past pivotal points, we can have these discussions, right? So let's take a look here at the price action. The reason why we're at a very pivotal point is the level we're at now, right? We're closing in on a 1306. This has been, we've seen prices dip below there during this run, but we did not close below there on the daily. So if we have a dip to, let's say, 12 cent or even 12 cents, even here at 11 cents, we'll say, hey, it's not saying, oh, it's going back to 8 cents. Not necessarily. We've done this 1, 2, 3, 4, 5, 6, 7 times, right? During this run here, right? We've done this 7 times. So it does not mean that it's necessarily going to have a retracement below 10 cents. It just means that based off of the last 7 times, this has been the absolute best time to, people that accumulated here, they saw the biggest returns during this run, right? So if you were able to accumulate here, you saw the biggest return here. If you're able to accumulate here, you saw the biggest return here, right? At around 16 cents. So it went from 12 cents to 16 cents, right? And if you accumulated here, which is, let me stop saying here, just for those of you that are listening. If you accumulated on March 19th, you saw your biggest return on March 28th, right? If you accumulated on April 12th, which was the bottom, you saw your biggest return on May 4th, right? If you accumulated on May 1st, you saw a good return on May 4th, but you peaked around like May 24th, right? So pretty much what this means is we've bounced from this region 100% of the time during this run here. So it's going to be very interesting to see just overall what this means for the crypto market, and see if this is going to hold up yet again. Because typically speaking, we've had these liquidations down to this point, and then it takes off again, right? So what does this mean overall? What this means is the market is getting extreme rejections to the top side. And it's not just Doge, right? We can take a look at Bitcoin. Bitcoin has been rejected in the 70,000 range. I want to say like 24 times now. It's crazy the amount of rejections here, right? Every peak of these candles here in this range is a rejection, all right? I'm not going to count them here, but I'm pretty sure it's in the 20s. I've done so. Even if you look at some lower time frame charts, it's astronomical, the rejections that we've seen between like 70 and 73,000 for Bitcoin. So what does this mean? What this means that Bitcoin and the crypto market has to search for liquidity, enough of it to be strong enough to break those that resistance level there, right? So this, in layman's terms, this means that it's bouncing between support and resistance, right? And when the support that's close to it, let's just say for here, let's just say it has support, it goes to 70, but it has support at 68. Well, not enough buyers are coming in for it to be strong enough to break above it. So it bounces back up to 72, then it goes back down, then it bounces back up to 72, then it goes back down. And eventually these people that are holding here, waiting for higher numbers, they'll say, hey, I believe this is a weak trend. I believe this is going to go lower. So they end up selling, right? And then we have that selling pressure along with the people that are already trying to short it or whatever to get it down. Then it goes further down into that liquidity zone to grab enough liquidity. Then the buys come in. They'll say, hey, this is a great deal. 58,000. I love this. This is a great deal. We're going to buy, right? So then we start getting the strong buys here, right? See, big candle here, big candle here, big candle here, goes up, gets rejected again, right? Same thing repeats itself, right? We're waiting, shorts coming in, people are selling. Okay, the trend's getting weak. Let's just go ahead and take profits here, and we'll wait for a retest, try and get it lower, and then see if we can ride it higher again, right? So the same thing is repeating, right? We're going down, searching for that liquidity to get enough liquidity in the market to retest again. Same thing is happening across the board. You can apply that with any coin. It's supply and demand. That's typically how it's working. Same thing with Doge here, since in the previous trend here between that 16 to 18. Because Bitcoin has been struggling around the 70 mark, not a lot of extra capital is coming into the market. So you're seeing all of these rejections here. Even if you look at lower time frames, that these rejections are going to be magnified greatly. You're looking at all of these rejections here. Even when we had the push here to even have the golden cross that we were talking about, when we had the literally emerging into the 14 into the 72, then what happens? The price drops and we end up not even emerging, and we end up going to the downside, right? So that is a sign that there is not enough liquidity in the market to even push the 14-day average through the 72, right? So the trend literally got weak because all the other coins, the big movers, I'll say, not all the other coins. I don't believe Sheeb or some. I believe like the top 3 coins got their golden crosses, so that's why they were able to kind of go retest like those. We'll even set those all-time highs and then consistently retest them. And then obviously the latter coins, they get theirs a little later because the liquidity goes into like the big 3 first, right? And then for like the latter coins, they were approaching that point. And then of course the bigger coins got rejected. So now we have that slight divergence overall in the market. Let's take a look here. This Coinbase, yeah. So overall, what does this mean? So this means that we are in a very important zone right here. So around where we close at for the next few days is going to be very important. Now, we could simply just have a low volume day and go sideways here and get ready for that retest. That's fine. That just typically means that there's not going to be additional liquidity coming out of the market. When we were hitting these numbers here, like back on May 1st, when we dipped down to around 11 cents, Bitcoin dropped to, I want to say 58,000. So that's why that's how we saw that big dip there. Obviously, it's not that low right now. So unless we see another big pull out of the market, then we can't necessarily expect it to be like a Dogecoin specific liquidity pull or something like that. So more so, that's why if you've been following me on X or even in the community section on YouTube, you know I've been posting a lot, doing the comparisons between Bitcoin and Doge, and you'll see the liquidity coming out of the markets. Shorts, let's see, down 0.86 cents per today. They're taking a larger position, but not in comparison to what they've already had, right? So they are not going above, they're not going anything near to what they had a month ago, which is interesting. So even though the markets has been selling off, they are not comfortable even taking the positions that they had a month ago. So, and this is for good reason, because normally once you get in this range here, even with this cycle here, this cycle has been very interesting, right? Because they've gotten wrecked a few times when it looked like it was going to crash, and they'll pile in, and then it would hit a liquidity level and simply just soar with huge candles the next few days, and they would get destroyed. So I don't blame them for being cautious here, but it's also telling where the market is, because now they're not necessarily front running short. They are reacting to what's already happening, right, as far as what's selling, because it's not the shorts that's pushing the price down. This is definitely a liquidity grab, and the shorts are not front running that. They're being very careful, strategic, and this is like them taking very minimal profits here because they're not jumping in before. They're simply trading news versus trends. So this is very interesting to see here for Doge. Let me try Bitcoin shorts. I'm curious. Bitcoin shorts on an uptrend, not anything substantial. And same thing, not seeing the same shorts that we even had a month ago, which lets me know the same thing that I was saying for Doge is they are being a little bit more cautious for where they end up as far as from the cycle here, just because simply the strength of these runs that we've been seeing. And when it does bounce back, it bounces back really, really hard. So total market cap at the 72 day, right? So last time we were here was May 18th, May 19th. And then we got a big candle to the upside here. So nothing. Yeah, we're not even breaking the, this is one of the things that I was saying as far as for like the support levels. We have some room to go here. Kind of like with Bitcoin and Doge, there's still some room there, even if we wanted to go back to the downside before we start talking about like major like retracements and all the kind of stuff like that. So right now we've simply seen sell-offs that we've already seen several times in the market. I know sometimes people have short-term memories, but we've already seen these types of dips before from this range. Like if you look here, you'll say, oh, it's total market cap's going from 2.5 trillion down to 2.3. We've seen that already in April, right? And we've seen that in March. So this is not, and even with Doge, like I said, we've seen this 7 times already. So this is not new trends here. I know sometimes people have short-term memory, but it's not nothing new here. Like there's a major sell-off and it's like, oh my God, it's going back to 8 cents. So let's talk about this 8 cents thing, right? Let's go back here. So I'm going to go Binance. Okay. So as I was mentioning with this zone here, and what we're talking about, the potential of it doing what it's done the previous 7 times, which is grabbing liquidity from here and going in a reversal. Now, all of this is technically what you would consider gaps, right? The market established this to be a support area. So because typically gaps fill, gaps to the downside, gap to the upside, it doesn't matter, it doesn't discriminate. They typically fill. The market decided that this zone here in 1189 was an absolutely great opportunity to buy Dogecoin, and they've done so in a great volume for the last 7 times roughly, to reject it and go to the upside. So for you to say that Doge, okay, well, it's going to the 8 cents, that would have to break this trend here where all of these buy orders have consistently came in, and that would mean that no new trend would form, and it would go back to the median price average, which was in February 24th. We would need to at least before people. I know people like to, it's just, I guess it's kind of like the opposite of spreading bullish news. People like to spread panic. We would need to get some evidence here of the coin at least even attempting to break below that 1189, or even closing at 11 cents or something like that, right? Because we have not done that. We've went there in price action, but we did not remain there for more than a day. And you can see this here in the charts again. March 3rd, March 5th. What is this? March 19th, March 20th. This one closed a little higher here on April 13th, but then again, you see it on May 1st and May 2nd. So you've seen this here, but we have, those are wicks that we've seen at these price levels. The candle closed higher. So before we start talking about, oh, it's gonna break the current zone, it's going back to 8 cents, because people have been saying that ever since we had this initial run here, when we got the 10 cents, they've been saying this since February. So let's get some evidence there first, because again, 7 times, 7 out of 7, it rejected and moved to the upside once we hit around that 12 cents, that 11 cents range. So again, Bitcoin has dipped to 58,000 and then rallied before. So this is simply a liquidity grab here to go to the upside. So let's deal with the top for Bitcoin, the top for crypto, top for Bitcoin, and whether or not these numbers are affected. So I've seen a number of articles saying that, okay, well, the top is in, or the top has been affected, and it's not going to hit some of those higher numbers that we thought. First off, there's no evidence of that. And B, when we look at trends, this trend is certainly different from the ones we've seen before, because we ran early and now we're giving up some of those early gains, more than what we expected to. But as far as for when the market peaks, right? Because because we came out strong and because we ran early, that opened the door for, hey, we can run early or even a shorter bull run. That was for some of you that have been following. That's something we talked about back in like February and March. We were saying, hey, because we're running early, it opens the door for a shorter bull run, right? And with the way things are going, it's like, no, we're going to get the full cycle. We're not going to get the shorter bull run. So it looks like per history, peak bull run is going to be Q4 of 2024, Q1 2025. Per all the other previous trends, it looks like we're pretty much on par for that. So that theory is out of the window here. It looks like we're going to. We had a rush of capital come into the market early, but now it looks like we're back to regular programming as far as for the cycle and how things play out in the market. So when we start talking about peak bull runs and the price overall being affected, no, because first off, we still, as far as for cycle wise, we still have plenty of time. And again, we are, even now at these prices, we are still higher than what we were on previous trends when in relative to what the all-time high is, even for Doge, right? So even now with the consolidated prices, we're still doing better than previous trends. So we have not given up all those gains. So it's not like we've hit a number and then reached the pre-run prices in any of the coins, in any of the top 10 coins at least. So the projection saying that, hey, peak bull runs numbers needs to be adjusted. We don't have evidence of that. The biggest thing that we were talking about, even when we were charting out the 22 cents and the next leg and getting the projection saying, hey, if we can reach 45 cents this leg, that'll open up the door for this. The second leg happens when it happens, right? So if it gets rejected and the second leg has to happen later, we still evaluate the strength of that second leg. It's not like the second leg needs to happen in May, right? And if it doesn't happen in May, then the whole bull run is trash and we're not doing it. So there's a reason. Typically, the bull run is 18 months, right? Now, if this was January and we were at these prices, then yeah, now we're talking about some major adjustments. Or December and we're at these prices, then yeah, now we're talking about some major adjustments. We need to reel it back in because the time frame as far as for when the money leaves out of the market is approaching. So we need to make these adjustments. But in June, 6+ months before we're expected to even get to like peak bull run, because historically the trend starts to get really aggressive once we like for Bitcoin, like December of last year, and then you'll gradually see the uptrend here, and then we start to get the blow off top later in this year, early 2025, right? So even here with the rejections here, we're supposed to be seeing over the next few months like some gradual increases, but not necessarily have to be like the blow off top and the God candles every month or something like that. So until we still have too much time to be saying, okay, well, we need to adjust these peak numbers yet, right? Let the charts play out. Let the liquidity, if the liquidity needs to come out, it's going to let it come out. It's going to happen multiple times, right? This is something I said like last month with Dogecoin. During peak bull run, Dogecoin dropped from 45 cents to 12 cents, right? This is not the only sell-off we're going to see. We're going to see many of these, right? More aggressive than what we're seeing right now, right? So I know sometimes it's a little frustrating seeing the same numbers over again, but rest assured, if you're talking about being in the crypto market from now till peak bull run, you're going to see bigger swings than what we've seen right now. There are going to be other points of resistance. There are going to be major sell-offs. Shorts are going to spike to the heavens. Like the whole site, everything that happened in 2020, 2021 happens in this cycle, right? Probably even to a greater degree, since now we have the political arena opening up for crypto and ETFs and the potential for futures and all that kind of stuff. So maybe even greater so, right? But right now, no evidence talking about adjusting numbers. We have to let the charts play out, see where the liquidity is coming from, and give it time, right? Because we have time as far as from the crypto market, and just kind of look to see, hey, where we're getting the support from, where we are getting the buy orders coming in, where the liquidity is going, things like that, and going with the flow of the actual cycle here. So as I mentioned, we have a very important zone for Doge coming up, and then if that were to, like if Bitcoin were to break 58,000 and Doge were to dip below or close below like 12 cents, 11 cents, then we can start having like that conversation. Okay, well, where is the next bottom? Where's the next pool of liquidity going to come in for crypto? But until then, we're getting ahead of ourselves as far as we're saying that the bottom's in, or Bitcoin's going back to 20,000. I've seen that. Doge to 8 cents. I've seen that. And peak bull run is already here. So 73,000 Bitcoin and 22 cents Doge. That was the peak of the crypto market, and we're going back to the bottom. And because people are saying like, see you in 2028. Just be careful, and just make sure that you're kind of just looking at the things here. Again, charts aren't God, but it gives you something to point to for having your thesis, right? It's not so that your opinion based off of what's happening isn't based off of emotions, right? It gives you something to actually look to and gives you some facts as far as what's actually happening. And that's typically what I do when the market is throwing candles in different directions and stuff. We wait on the facts, right? It's the facts that Doge has bounced from this level 7 times. 7 out of 7 times, it's a fact. Doge grabbed liquidity here and rally. That's not negotiable. That has happened. So what we're looking at again is we are looking to see if we're going to get a repeat here. And if we get a repeat here, that means that historically speaking, we're running to around 16, 17 cents for a retest, right? And that's the thing where I was saying bouncing between liquidity zones until you get enough liquidity to break through that zone. And Bitcoin is in the same predicament with that 70 to 73,000 range. So let me know your thoughts in the comment section. Let me know if you think, matter of fact, let me know if you think that the top is in for any of these cryptos, whether that be Doge, Bitcoin, Ethereum, whatever. Let me know if you think the top is in for the market and the market's going to settle for the next 4 years, because that's a hot topic on X. So I want to ask you guys here. Let me know what your thoughts are. I would love to hear them. Subscribe to the channel if you found value. We have some time here to beat Bitcoin to 100,000. So please help out with that if you can. I appreciate all of you, and I will see you guys in the next video.